going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a wonderful day today. Now, Bitcoin is continuing to consolidate sideways, still not really making any big moves. It's almost feeling like that calm before the storm. Now, one thing I do just want to point out before we get to the Bitcoin chart and news is that the S&P actually fell into the danger zone. You can see right here, it did fall below this downward sloping trend and below this upward sloping trend. It fell below both of them this morning. It did wick back up and it is currently sitting above both of those levels. We are still in this falling wedge pattern. So are we going to have that big breakout in stocks to the upside? Because we have been having fun with this idea about, Bitcoin being correlated with things happening in the East, but we have noticed that ultimately it still, unfortunately, is following the West. And if we do have this breakdown, will Bitcoin actually follow, considering that stocks have been falling and falling and Bitcoin's just been going sideways? So I do want to talk about that specifically. And I also want to discuss the fact that there appears to have been clearly some coordinated FUD. Now, this is pretty crazy. It even gets into maybe conspiracy, kind of realm, which we're not going to go crazy today. But even going back to the Terra Luna crash with the UST stablecoin DPEG, it almost makes you wonder, did someone out there not want crypto to do well? Did someone want to buy Bitcoin cheaper? Does somebody not want crypto to exist at all? So we're going to talk about that today, and I want to discuss the bullish news that the media seems to be overlooking. I think you're going to find it very interesting to see the opposite, complete polarization of what's really happening versus how people are perceiving it, right? Because we've actually seen crypto outflows now for 3 straight weeks. So there's obviously some type of fear, right? So we're going to get into all that today. If that sounds good to you, you know what to do, guys. Get subscribed. Let's hop in. Let's have a look. Now, as we are, continuing to watch Bitcoin essentially not really follow the S&P right now. The S&P is falling and falling, and Bitcoin is actually going up, right? I mean, yeah, we've had a little bit of a dip here, but ultimately Bitcoin is actually in this ascending parallel channel. Now, some people might say, oh, well, it's an ascending parallel channel. Doesn't that mean we're going to break to the downside? Well, if we actually look at the difference, there's 2 main differences to what we had back here, and we fell to what we have right here. Number one, okay, we came off a major sell-off, okay? So this was already very bearish. There was lots of selling, and this is an ascending wedge pattern. You see, it's like a triangle. That's bearish, okay? So that's the first thing. Now come over here. This is coming off of an up move, okay? So we have buying momentum, bullish momentum, and we're consolidating in a parallel channel, okay? This is a wedge. It's a triangle. This is a channel, right? Same exact parallels on either side. Obviously, again, going back here, look at this perfect trend. And look at even where we're touching right here. Exactly. We had the perfect bounce off the bottom, right? So we have a higher low, higher low, higher low, higher high, higher high. Exactly perfectly bouncing in this channel. Really great for trading, by the way. Really easy to trade. So ultimately, having a look at this, very, very different structures. Could this mean that Bitcoin is going to have that breakout to the upside? Will we retest 25.3 and head up to our next level of 28? As you guys can see right here, just simply taking out all these pivots, Bitcoin has basically just been hitting it, coming back, consolidating, and moving up. That's what Bitcoin's been doing. That's not what the stocks have been doing. That's what Bitcoin's been doing. So Bitcoin is slightly decoupling. You can see right here, we came up to that pivot level, boom, smashed it. This one right here, same thing right there, retested it. Again, up here, 25.3, boom, hit that again. The next level is this area right here. And this is why I said, we could see Bitcoin come all the way up to $28,000 before seeing that major correction back down to this trend, okay? So, just like it can always go lower than people think, it can always go higher than people think as well. So of course, if you guys do want to learn how to trade, we are looking for some signals right here. Make sure that you get subscribed to the channel because you can see that we're starting to have a potential trade scenario happening again. If you want to learn, I would highly suggest that you check out the tutorial popping up above. Go down below, check the links. There's $56,000 in bonuses. Take advantage of that, guys. Multiple different platforms, centralized, decentralized. I go over everything. But as you guys can see right here on the daily, okay, we are starting to put in a smaller potential trigger wave. Now, I just want to put in a word of caution that on the weekly, we are still technically in this red, even though it looks like we're trying to come out of that money flow, into the positive, but we are starting to curve over. So honestly, on the bigger time frame, it still is looking like potentially we could have that, curve to the downside. But like I said, just pay attention because anything can change, guys. Right here, we're having a lot of money flow on the daily. We are potentially looking like we could have that smaller move. And the 4-hour gave us this little pop right here, but I wouldn't take that because that's a little bit of a lower time frame. But ultimately, yeah, I do think that the max pain scenario could be to the upside. But here's where the fear comes in, and let's talk about why there's fear. Well, you can see that the outflows of crypto investment funds have again for the third straight week been negative. So the reason for this is many of these, traditional investors can't really hold crypto directly. So they prefer to trade with listed funds. So they're saying that these are pretty much aggressively ongoing due to the regulatory crackdown in the US and the fears of what the Fed is going to do with the rates. Now, this is hilarious. I'm not saying counter indicator, but Jim Cramer comes out again. Now, he was saying dips are for buying. We're back in a full-on bull. Now, all of a sudden, the stocks have been falling. And then he says no real rally unless rates stabilize at any level. So now Jim is bearish again? Wasn't he just bullish the other day? Well, he's bullish at the top and he's bearish at the bottoms. It makes no sense, guys. It makes no sense at all. But here's the thing. So we have Bank of America basically saying that they anticipate the Federal Reserve raising interest rates to 6%. Now, keep in mind that most people are expecting it to be around 5.4%. So, 5.4 to 6, this would basically mean that they're going to do a few more 25 basis point, or, there is even the rumor that they might do the 50 basis point, which is why markets are pricing that in. Now, according to Bank of America, the possibility of a rise in interest rates is likely due to strong U.S. consumer demand and a tighter labor market. The bank also mentioned that it could possibly push the central bank to fight to reduce inflation for a longer period of time. Now, the strange thing about a bank reporting on this is that higher interest rates are better for banks, but also, right, because they're getting a higher rate, but at the same time, on the flip side, less people are likely to borrow money at higher rates, right? So they actually would prefer the rates to be potentially a little bit lower because then they will get more volume of more people, whereas now there's less people willing to take on these higher rates to borrow money, right? Which is also why, you have seen things like stocks and Bitcoin fall, etc. This is what they're trying to do. This is their plan. But obviously, the plan wasn't working because stocks were rallying anyway as the dollar was falling. So it seems like it's been a chain of negative news. Now, stick with me and just watch how crazy this is. So this literally comes out yesterday. Payment giants Visa and MasterCard push back launch of crypto products due to uncertain market conditions. And everybody was talking about this, right? I didn't report on this, by the way. As you guys know, I didn't even make a video yesterday because I wanted to give this a day to blow over because I was looking at this and I was noticing that there was just this crazy push of negativity. I'm going to debunk all that right now. So this is what they put out yesterday, right? Oh, well, guess this, guys. Visa says that the firm remains committed to its crypto strategy. This comes out today, despite the recent high-profile failures in the crypto sector. The statement contradicts an earlier report from Reuters claiming that the firm would delay the launch of certain products and services. At Visa, they said, "We don't pick winners. Our job is to support an array of ways to pay and to study new technologies that may impact the future of payments. To that end, we are focused on growing our core competencies in Web3 infrastructure layers and evaluating the blockchain protocols driving crypto development." Let's continue. SEC issued subpoena to Robinhood over its crypto operations. More FUD. California Attorney General's office had earlier served a similar subpoena. Obviously, this is because, they're talking about the definition of a security, et cetera, taking a big stance on the crypto space. But that's interesting because Robinhood just rolled out a wallet for iOS customers globally that does support Polygon and Ethereum. And Android support should be coming later this year. Well, it seems like they're pretty positive on crypto while everybody's quite negative. How about this story? Coinbase exchange to delist Binance USD, saying that its stablecoin no longer met their listing standards. And also that Binance, this wasn't directly from Coinbase, but there was the accusation that Binance was shuffling funds and it looked a lot like FTX, right? We're going to get back to Coinbase in a minute, by the way. So fast forward, CZ comes out and literally says, I am reluctantly spending time on FUD again. Forbes wrote another FUD article with lots of accusatory questions with negative spins, intentionally misconstruing facts. They referred to some old blockchain transactions that our clients have done. Now remember, people on Forbes, they take, because it's a very popular name, but anyone can write Forbes articles. Anyone can contribute and publish on Forbes. A lot of people don't know that, right? So who was behind this article fudding Binance? I'm sure someone can just look it up and give me the guy's name or woman's name, whatever. But the article tries hard to categorize Binance and FTX together, including the choice of the article title. We are different. Binance has stood the test of time with users safely withdrawing billions of dollars in December alone. I am deeply disappointed with Forbes continuing to write baseless articles, losing their own credibility, right? Now, just talking about the SEC, is the SEC behind all of this? That would be crazy, right? Nobody really knows, although Gary does have a very interesting track record, especially, going after these other guys, right? Jay Clayton, Gary Gensler, and the SEC, they went after Ripple, they went after Kraken, they went after Library, but they had meetings with FTX and let them continue to operate. They are the problem in the crypto industry. They're trying their best to destroy so that they can control. Karma will come. Does it seem coordinated? We've been saying this for a while, and I'm not done yet. I'm not done yet, guys. Now, this is involving Grayscale, and I know that Grayscale has some of their own problems going on right now, obviously, digital currency group. That's for another day. But Grayscale says that it is preparing to argue in court next week that the SEC inappropriately treated its Bitcoin exchange-traded fund bid differently than earlier decisions on future ETFs. According to the company's legal team, the company's application to convert the Grayscale Bitcoin Trust into a spot Bitcoin ETF was denied, so Grayscale took the SEC to court. Now, big day, guys. Big day. Next week, mark your calendars, March 7th. The sides are set to make their argument to the federal judge in the U.S. Court of Appeals. And Grayscale's team will contend that the regulators had a constrained role here and did not follow logic in its rejection after having approved several futures ETFs under similar risk profiles. So futures, right? You could bet on it using cash, but you can't bet on it using the actual underlying asset. Why? Why not? Very interesting. Grayscale's chief legal officer said the case has obvious major implications on Bitcoin and that winning it would be very good for the market. But if the company loses, he said they'll fully exhaust appeals, even if that takes it to the U.S. Supreme Court. I'm not done yet. I'm not done yet, guys. We're going to keep going. How weird is this? How weird is this? So, we know that everything kind of started with the Terra Luna crash, right? And people have been pointing fingers saying FTX, Celsius. Could have been. We don't really know the full extent of everyone that was involved. We're still having the details come out today. But there is a researcher that goes by the name of Frank researcher Igor Igamberdiv, I believe his name is. And this suggests that there's a good chance that Terra's collapse was largely triggered by quant trading firm Jane Street. Now, before we go any further, who is Jane Street? Well, they say we are a global liquidity provider and trading firm using sophisticated quantitative analysis and a deep understanding of market mechanics to help keep prices consistent and reliable. That they did a wonderful job keeping the stablecoin stable and keeping Terra Luna afloat, correct? If they were invested. Now you come down here and you can see that he goes on, and if you guys want to follow this guy, I mean, this is his information. I'm not going to go into the whole thread. Obviously, he did the chain analysis for us. But you can see right here, whether or not Jane Street intended to depeg USDT remains unclear. The firm has been rumored to have participated in Terra's attempted bailout, along with Jump Crypto and Celsius. Given that Wallet A, which was this wallet in question, had their UST on Anchor for a month, it wouldn't necessarily mean that Jane Street had malicious intent. However, we would love to hear about Wallet A from them. So they say they've reached out to Jane Street and they're waiting to hear back. So like I said, we don't know. It could have been nothing. It could have been something. It's just very, very strange. Now here is the big push. Here's the positive, right? Coinbase has launched a nationwide pro-crypto policy campaign. With regulators quickly clamping down on crypto, Coinbase seeks to foster grassroots support for the industry and influence politicians to be more welcoming of it. The company has announced Crypto 435, a grassroots initiative to expand pro-crypto advocacy to citizens across all 435 congressional districts. They go on to say the crypto community has reached an important moment. Decisions being made by legislators and regulators in DC and around the country will impact the future of how we can build, buy, sell, and use crypto. Some of the industry's supporters in Washington have criticized the SEC, such as Hester Peirce. Coinbase CEO Brian Armstrong backed Hester Peirce's claims while opposing many of the SEC's assertions that certain crypto products, including staking services and tokens, are securities. We need a thoughtful policy making and smart regulation so that we can continue to advance crypto and Web3 and make progress on our mission to increase economic freedom. Again, going back to this statement, Jay Clayton, Gary Gensler, the SEC, they went after Ripple. What was Ripple doing wrong? They went after Kraken. Kraken is like one of the most legit exchanges on planet Earth. They were one of the first ones to do the actual proof of reserves and liabilities. Library, honestly just trying to allow a platform to put decentralized content using a utility token. But FTX, nope, they had meetings with them and they were trying to make FTX basically the go-to exchange. Or for the conspiracy guys out there, for what, Jesse Powell was saying the other day, the CEO of Kraken, did they let the bad guys win? Because like he said, you could always put the bad guys away, right? You could put SBF in jail later. We know he's a criminal. We'll get him later. Let him keep doing what he's doing. Let him create this fire, right? So that then we can step in and save everybody, right? Is that possibly what's happening? Well, Goldman Sachs, they were another one, right? That was coming out and they had their opinions. Well, look at this. Their digital asset team is ready to expand with a new blockchain platform. And you can see that the GSDApp platform, a private centralized blockchain, I add, controlled by Goldman Sachs, has already trialed in Hong Kong, selling $100 million worth of green bonds. Okay? Now, there is the possibility that there may be a little bit of sell-off, but again, how many times have you heard people talk about this Mt. Gox situation? Well, it looks like starting in about 9 days, the deadline will come to be paid out by September 30th. But they're going to be made in a mixture of crypto and cash. And we've also gone over the volume. It's not as much as people think. Even if they were to dump it all on the exchange, Binance does that easily in a day. So, what? We get a little 5% wick to the downside, and then boom, the big Mt. Gox crash is over, right? But this is what you need to pay attention to. France's financial market regulator, this is what's going on around the world, will now detail new requirements for crypto firms to register in the country. This is according to its head, Marie-Anne Barbet-Leani. She says, we will work to clarify these new rules. She said she would adapt French crypto license conditions to make them as operationally close to as possible as new European rules. Listen to this. In a proposal rubber stamped by the French National Assembly, lawmakers propose strengthening the regulatory regime in the wake of the FTX collapse. Again, using that as the example, right? But she urged them not to tar the whole industry with the same brush. Digital finance shouldn't be condemned for FTX any more than traditional finance was for Bernie Madoff. And, I know a lot of people are not really particularly fans of Cathie Wood. I know her ARK Invest hasn't done quite well, but she broke it down pretty much to a T. And I just wanted to play this clip super quick.
Sam Bankman-Fried didn't like Bitcoin. Why didn't he like it? Completely decentralized, transparent. He couldn't control it. FTX and Celsius and 3AC, completely opaque and centralized. Those were the companies that went under. The blockchains, whether you're talking about Bitcoin or Ethereum and many others, they didn't skip a beat. Transactions did not stop. And I think that has given us a lot of confidence that actually they're on the right track. We think there are 3 revolutions taking place simultaneously. There's the money revolution, which is mostly Bitcoin, a bit Ether. There is the financial services revolution, which is Ethereum, as is this notion of digital property rights. First time. That's Web3. Digital property rights. With an economics background, I know that the best way to lift people and countries out of poverty is to give them immutable property rights. And we think that Web3 is all about bringing digital property rights into this new world.
So that's it for me. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos in the first place. I do believe this is sort of that calm before the storm. I do think we are looking for a big move. Make sure that you get subscribed. Follow me on all the socials. I have TikTok, Twitter, Instagram, and I do post different content over there that I don't post on YouTube. So if you want the full spectrum, check it out, guys. Make sure you check out those links below. If you want, I do have this Apex tutorial. I highly recommend it for decentralized trading, or BitGet is a really good option. There's $30,000 in bonuses on Bybit. So whatever you guys choose to do, that's it for me. I'm out. Check this video popping up right here, right now. Until next time, stay crypto, and of course, peace out.